If you're a homeowner in Minnesota, you've probably gotten at least 5 phone calls. They must be from other lenders asking you if you want to refinance. With interest rates bouncing around, you might be wondering if now is the right time to refinance or if you should be waiting. I'm Allison Larson, and I've been helping Minnesota homeowners with refinancing for over a decade. Today, I'm going to give you the straight answer about when refinancing makes sense, when it doesn't, and how to know the difference for your specific situation. Let's start with good reasons to refinance, because there are several that could save you some serious money. The most obvious reason is to lower your monthly payment. If your current rates are meaningfully lower than where you're paying now, this could make sense. But here's what most people don't understand. It's not just about the interest rate. You need to factor in closing costs, which typically run 2 to 3% of your loan amount. For example, I just helped a client in Minnetonka who's paying 7.25% on a $400K mortgage. We refinanced her to 6.4%, which saves her about $280 a month. Her closing costs were about $8,500, so she'll break even in about 30 months. Since she's planning to stay in the home for at least 5 more years, it was a no-brainer. The second reason you might refinance is to pay off your loan faster. Maybe you want to switch from a 30-year to a 15-year mortgage. Your monthly payment would be higher, but you'll be saving massive amounts of interest over the life of the loan. I had a client do this last year. Their payment went up by $400 a month, but they'll save $127,000 in interest over the life of the loan. Third is a cash out refinance. This is where you can borrow against your home's equity to get things like home improvements, paying off high interest debt, or even investing. You can typically borrow up to 80% of your home's value. Here's a real example. I had clients who owed $250,000 on a home worth $450,000. They did a cash out refinance for $350,000, paid off their previous mortgage, and got $100,000 of cash to finish their basement and pay off all of their credit card debt. Their new mortgage payment was only $200 more than their old, but they eliminated $2,800 a month in credit card payments, and they have a new basement. And also on the flip note, they're getting rid of mortgage insurance as well. If you put down less than 20% when you bought your home, you're probably paying PMI or private mortgage insurance. If your home has appreciated, you have 20% equity. Refinancing can help you eliminate that PMI payment. Now, let's talk about when you should refinance, because this is probably the most important part. First off, if you're planning to move soon, those closing costs I mentioned, you need time to recoup them through monthly savings. So if you're planning to sell your home in the next 2 years, refinancing probably doesn't make any sense. You'd be wasting that initial upfront investment that you put. Even if you don't realize you're paying it because it just put it into the interest rate, a dramatically lower interest rate wouldn't make that change. Second, if your credit score has dropped significantly since your first mortgage that you got, your credit score can directly impact the interest rate you qualify for. So if it's directly impacted, it's gone down by, let's say, 50 points, you might actually qualify for a worse interest rate, even though the market conditions have improved. And on the flip side, if your credit score has improved, it might make sense even though the market's the same. Third, if you owe more than your home is worth, this is pretty rare in Minnesota right now, given what home appreciation has been over the last few years. But if you're underwater on your mortgage, most refinancing options won't be available to you. And here's one that surprises people. If you've already paid down a significant portion of your mortgage, let's say you bought your home 15 years ago and you only owe $100,000 on a home worth $400,000, refinancing would just restart you on a new 30-year clock, and you'd end up paying more interest over time, even with a lower interest rate. I had a client who called 12 years into his mortgage. He owed $150,000 on a home worth $300,000. Even though I could get him a lower interest rate, when we did the math, he'd have to pay $40,000 more total in interest by restarting that 30-year clock. We decided for him to not refinance at this point. Now, here's what's different about working with Guild specifically, and can make a huge difference when you're looking at doing your refinance. And this is something that most homeowners have actually no idea about. Guild services their own loans, which means when you refinance with us, you can do things other lenders can't. We don't have to restart your amortization schedule. So let's say you're 7 years into a 30-year mortgage, we can just keep you at 23 years remaining instead of starting way over at the 30-year mark. Actually, we also don't even charge for lender fees on refinances for existing Guild customers. That can save you $2,000 to $3,000 right there. And we can net out your escrow account, which means you don't have to come up with cash for a new escrow deposit when you're refinancing either. I just refinanced a client who was 5 years into his Guild mortgage. We lowered his rate by 0.75%, kept him at 25 years remaining instead of restarting him at 30, and he didn't pay any lender fees. His monthly payment dropped by $300, and he'll pay off his home 5 years earlier than if he had refinanced with a different lender. So what does the refinancing process actually look like? It's similar to when you first get your mortgage application. Documentation, appraisal, closing, the whole process that typically takes 30 to 45 days. Here's something that's cool that's specific to Minnesota. You can use Minnesota Housing's Step Up program for refinancing too. This program offers below market interest rates and can even provide cash assistance for certain improvements. I've used this program to help clients refinance and get money for energy efficient upgrades, windows, maybe a different roof, whatever the case might be. The key is just running the numbers before you start. You need to know your current payoff on your home's current value, and be really clear on what your financial goals are. Then we can determine if refinancing makes sense and which program or loan type is best for your situation. Here's the bottom line. Refinancing can be a really powerful financial tool, but it's not right for everyone in every situation. The only way to know for sure is to have someone run the numbers for you specific to your situation. I offer free refinance analysis for Minnesota homeowners. We'll look at your current mortgage, your current payoff on your home, your current value of your home, and have an in-depth conversation about your personal financial goals. Then we'll determine if refinancing makes any sense for you, if it is a powerful tool or if it isn't. If it does, I'll show you exactly how much you'd save. If it doesn't, I'll tell you that too. There's no pressure and no obligation. Just feel free to click the link below and schedule a free analysis call with me. And here's my promise. I'll give you honest advice about what's best for your situation, even if it doesn't mean you end up in a refinance. And lastly, if this was helpful, subscribe to my channel for more Minnesota-specific mortgage and real estate insights. I'm here to help you make smart decisions for your home.